All right. Well, thank you so much for that great introduction. I think I understood maybe 10 or 20% of it, but I appreciate you having me on, and want to walk through maybe for the next 25 to 30 minutes, kind of the view that we see, not only globally, but obviously within Western Europe and within the different countries as well.
Y también en los diferentes países. En primer lugar, suelo empezar explicando lo grande que es esta industria o este sector. Son casi 3.400 billones.
Around the world today, and 64% of it last year flowed through the channel directly. So from VARs and managed service providers and system integrators and ISVs and all the different types, it's about 2/3 of every dollar goes through the channel. It's $2.26 trillion today. And the big thing that's changing in terms of IT sales is where the money flows and who is working on deals with businesses and governments. First and foremost, every company in every industry, in every country, seems to be becoming a technology company. We've seen in the last couple of years where accountants, for example, 81% of them are now doing tech services. In the marketing world, digital agencies, now 78% of them are doing digital services. So around all of the different opportunities in multi-cloud and hybrid cloud, you look on the left, there's 800,000 emerging tech companies, AI and automation and Internet of Things and blockchain. We're a huge growth in that area. We're already at 175,000 software companies, up from only 10,000 10 years ago. And this number will be over 1 million 10 years from now. So huge growth in this industry, driving almost 2/3 of the market. So the reason why
Quedando con 2/3 de mercado. ¿Y por qué todas las empresas quieren convertirse en una empresa de tecnología y se están convirtiendo? Esto es porque hay una gran oportunidad. Lo que sabemos ahora es que en el mundo multinube, el 65% de todas las decisiones para la tecnología se producen fuera de la informática. Ya no es el director de informática o el CTO o el CIO, sino que son ahora ya los directores, los ejecutivos de las empresas los que toman esas decisiones. El 51% de los directores de las empresas se dedican a la tecnología. Así que los directores de marketing dedican más su tiempo a la tecnología que el director de informática. Así que estas
channels, like I mentioned, accountants and digital agencies and others that are wrapped around the buyer. Number two, we used to look at the world by industry, by vertical, and look at the big finance and insurance and pharmaceutical. We'd look at the technology industry and manufacturing. Well, today we look at the world by sub-industry. There's 297 sub-industries. So it's not about healthcare anymore. It's about a mid-sized clinic with 50 doctors. It's about a small dentist office. It's about a small hospital. There's different categories and different sub-industries in every industry that partners are working themselves into. Countries, 197 countries, but in some of the larger countries, we're looking by state, by province, by city, in terms of geographic specialization. I mentioned a 50-doctor clinic. The sector, size, and segment of a customer is really important when you look at the millions of channel partners around the world in terms of where they focus and where they play. And then, of course, a few years ago, we used to sell hardware, software, and services. It was simple back in those days. Well, today we look at 26 different categories of products. If you talk about security, for example, there's 7 layers of security below this, and then there's 17 layers below that. So it's not as simple anymore as just talking about, top level categories. So there's 26 categories and about 200 subcategories. The net is there's over 35 million opportunities in the market every single day. And every company in every industry are looking at these opportunities for digital and business transformation and coming in to make money and opportunity. So given where we are globally with COVID and the different country level, specific needs of customers, we went out and we talked to 690,000 people per year in survey. And we're asking them, where are they spending money in this stage of the pandemic? Where are they focused? And what are the things that the channel IT sales folks can do to really engage and to gather the opportunity. We know, for example, traditional computer infrastructure is down by double digits. Telco infrastructure, system integration, tech consulting is all down by double digits right now. We know on the other side of the ledger, things like infrastructure as a service. Microsoft Azure is up by 48 and then 47% the 2 quarters inside of COVID. We know that Google Cloud is up by 45. We know that the big SaaS companies, Salesforce, ServiceNow, Workday, NetSuite, Marketo, are all up in the 30s. So for the first time in 39 years in our industry, we've got a 70% delta between low performing and high performing categories. So as IT salespeople, we've got to figure out where we take our business in 2021 and what our customers are talking about. We know, for example, that they're talking about automation. So COVID and the pandemic was a big human failure. So we knew before COVID that automation was big, and industries like RPA, robotic process automation, was one of the fastest growing. One of the biggest companies, UiPath, grew 5,714% the year before COVID. Again, growing very, very quickly. And now the number one opportunity to look at workflows and processes and automation, business flows and business logic within every organization, within every department. They're looking to move humans to be parallel to processes as opposed to gates, and moving to a different future of work. I talk about the massive growth on the side of the cloud. Multi-cloud, hybrid cloud is absolutely gaining a lot of acceleration given where we are and, again, the different future of work. And it's not letting up. The big change in COVID, though, was having everyone go home. And now
coronavirus ha sido que todo el mundo está en casa. Ya sabemos que un año después que el 30% de las personas van a quedarse en casa. Nos hemos pasado de servidores en el cliente en los 90 a multicloud o multinube, que empezó hace unos años, pero se aceleró en los últimos 10 años.
Topology, which I call a remote topology or residential network, where you've got obviously thousands of devices, you've got all kinds of different needs, different threat vectors, different levels of compliance, different levels of continuity. All these risk factors now are different. And for a managed services group, for example, the 23% of customers who outsource some or all of their IT, that number is back growing again significantly because it's gone beyond their capabilities to handle this remote topology, the support, the service, the networking, the devices, and obviously the security and threat vectors are beyond their capabilities. And we're seeing a lot of shift now to managed services again. And then number 4, many companies in most industries got through survival mode pretty quickly, but are now moving into thrive mode. And they're spending a lot of money on technology to do it. So the areas of technology are customer experience. Every company in every industry has had to rethink their customer. Curbside pickup and all the different e-commerce and marketplaces, but they've also had to rethink about their employees. So different categories within human resources, HCM and different categories have been on a huge upswing. As you know, I'm in the US, it wasn't just the pandemic. We've had social unrest, we've had pandemonium, we had some murder hornets. It's been a very tough year and it continues. So there's investment on the customer side, there's investment on the employee side, and obviously on the partner side, which I'll talk about in a minute. So I'm going to finish off today talking about really the predictions and trends that I see shaping up in 2021 and things that we need to be thinking about around our customers and around where the market is going. The first is obviously the changing buyer. A lot of the changes that we started seeing in the last couple of years, the buyers getting younger. For example, millennials will be the main buyer in the next 4 to 5 years. We saw demographics, firmographics, a lot of things changing. I talked about the shift into line of business, but their psychology is changing, their behavior is changing, and COVID has accelerated. The pandemic has accelerated a lot of these behaviors, digital-only type of journeys. And we're now at a point where customers are going on these digital journeys, avoiding talking to salespeople, avoiding going on the web and filling out a web form with the correct information, and getting to vendor selection after a digital-only journey. So this is scary for a vendor that may lose a deal before they ever knew there was a deal. This is scary for a partner that their traditional sales and marketing isn't working the way it did in the past. So we have to start thinking about this new digital journey. We have to think about getting in early and often in front of this customer, because the majority of them now prefer this way of figuring out their solution to their problem. And a majority of them are now making vendor selection this way. So it's a massive shift. We also have external shifts. I talked about those 175,000 software companies. Now the majority of them are thinking product-led growth. So the rapid rise of Zoom, which we're on right now, was a product-led growth. It wasn't a channel story. The rise of Dropbox and Box, the rise of a lot of these companies now are via product, and the product itself converts the buyer, and they're escalating. And there's about 20 public PLG companies now that are worth $208 billion. So it's very much a challenge to partners in working with companies that take a PLG approach. The future buyer looks a lot like a consumer. So we're even seeing some D2C, which is, at home we have, consumption models now with shavers and mattresses and other things. We're starting to see that in the technology world, companies rethinking how they work with buyers. And obviously marketplaces around the world, Alibaba, Amazon, and I'll go into that in a little bit. But there's a lot of changing friction around this new buyer that the channel has to be aware of. The one thing that we do know, though, is that the average buyer will use 5 different partners through those stages of the customer journey. We ask them, who do you hang around? Who do you read? Where do you go? Who do you listen to? Who do you follow? Who influences you? And again, we have to ask 35 million people because it's different. But the fact of the matter is the average of 5 partners. This is a big change where we come from a single throat to choke. We come from an era where there is very much a trusted advisor. Well, today there's a lot of people sitting around the customer, and it may look like this. And for every one of those customers in the middle, 35 million of them, it will be a different set of partners that are influencing them. Different types, different sizes, different scale. And your ability to run a channel, your ability to participate is earning one of those 5 seats at the table.
But esos 5 que interactúa con ellos. Pero además luego habrá que reconocer quiénes son los otros 4. Y si no,
vendor or a partner is to be able to influence the influencers, the people who do, to make sure that you can get a piece of the opportunity going forward. So we're starting to see a massive shift in the way vendors run their programs. I predicted this last year, and we started to see this come out in a big way in 2020. It'll even be larger in 2021. Vendors are moving money to the left, which is before the transaction, this influence stage. Those 5 partners are mostly non-transacting partners or non-traditional. So they're moving money to make sure they get in that room and they influence that room. They're also moving money to the right of the transaction in a subscription consumption model where adoption, integration, stickiness, upsell, cross-sell becomes so important to have a customer for life. We're out of this mode now of a gold, silver, bronze program that covers everything in the middle. So there is no more money. There is no more additional margin that companies are paying for this. So they're taking what they paid in the middle for the last 3 or 4 decades and now moving it to the left and right. And partners have to understand where these dollars are going and make sure that they are there to collect them. So I'll take a step away for a second. And Accenture did a big piece of research where 76% of CEOs think that their current business model will be unrecognizable in 5 years. 76%. And ecosystems are the #1 reason why. So this is really interesting for the world of channels and IT sales, where ecosystems start to take over. And I start to look at every company in every industry. And I go to a European forklift manufacturer, for example, who for years and years has had a dealer network, sold through channels, but they added an Internet of Things device to every one of their products. And now this forklift sends out 1,000 data points per second. And now these 1,000 data points, not only how much it lifts, but the GPS coordinates, the temperature, the humidity, all these things are now there for the construction company, for the builder, for the architect, everyone within that ecosystem to build a bigger, faster, better, cheaper building. So they're now looking a lot like a technology company. If you go to their website, it's a technology company. This looks like you'd find on AWS or Microsoft's website, a chart like this. And if you click one more time, it is an ecosystem. It's a digital ecosystem. It's a central nervous system for everything. And think about all of these things that they're bringing together via these data points and how they're able to do it. So ecosystems are different than that transactional model that we've had for so long. And these are the three things that drive an ecosystem. It's value creation. 1 + 1 = 3 in front of the buyer, in front of the customer. Number two, there's different sets of network effects. You know, when that forklift goes and partners with Microsoft, Microsoft gets access into the construction industry like it never had before. And that forklift now gets access into Microsoft's network of other technology companies, the hundreds of thousands of software and other emerging technologies. It's 1 + 1 = 5. And then co-innovation. It's building blocks. It's an embedded white labeled future where all these things come together and 1 + 1 = 10 because new companies are created. I mentioned 825,000 new software companies are going to be created in the next 10 years. There's a company right now that's taking those 1,000 data points per second and thinking about how they can sell that to every construction company in the world and create their own innovation. So let's talk about subscription and consumption, because this is a key part of the changing business model. And if you've been paying attention, I worked at IBM for 17 years. And during that time, I was there during Lou Gerstner's years, where he built this services organization with 500,000 people. Well, that's now been jettisoned, and IBM is now a multi-cloud, hybrid cloud, AI-driven, 100% subscription consumption model. Completely different company going forward. If you missed that, Michael Dell announced all 7 Dell technologies are going 100% subscription consumption. And because of COVID, this is accelerating. This is EMC, it's VMware, it's everything within Dell Technologies, $93 billion. If you missed that one, Chuck Robbins announced all of Cisco moving this direction. So all these big client server companies, if you remember, HPE has been on this Green Lake strategy for about 3 years. They said by next year, they're going to be there, 100% subscription and consumption. So we're coming into a zone where all these big companies that were the anchor of the client server era are now consumption companies. And it completely changes the channel. This is 4 examples. You're going to see 400 more in the next 6 months of companies completely going all in on this changing business model. So I published the channel software tech stack of the 183 companies that sit below ecosystems and all the things you do to create, design, implement, collaborate, how you onboard, how you incent, how you co-sell and co-market, all the 100 things you do with your ecosystem. These are the companies that sit below that for every other company in the world. And I get to see their roadmap going forward. And by seeing these 183 roadmaps, I get a pretty good idea where the next 18 months is going in ecosystems. And I get to see all these new startups and I can see them solving big problems. Down in the ecosystem category, I've seen 6 new categories jump out to me in the last 3 months of ecosystem technology that's going to drive this future for 76% of CEOs. So what does this mean to a partner? And if I were to boil all this down to somebody that's in IT sales, here it is. We've always talked about gold, silver, bronze. You can make 30% front-end margin. You can make between 3 and 5% back-end margin on a deal. And it's always been that, what the deal, what percentage of the deal? Well, in this world of subscription and consumption, in this world of marketplaces, in this world of changing business models and a changing buyer, It's all now the multiplier effect. So it's a different level of communication. So we saw this a couple of years ago. For example, Salesforce announced that, on average, the customer of Salesforce would also buy 6 other things on the App Exchange, their marketplace. They also announced that the average customer would spend $4.65 for every dollar of Salesforce that they purchased. They published their total cost of ownership, which was heresy back then. You never want to tell customers that, it takes $500,000 to implement $100,000 of our software. Well, here it is. And they started to be the connective tissue in this layered cake of presenting the software and the hardware and the services. They also announced they're bringing on 250,000 new partners. They also announced they're shutting down their resale program. All kinds of changes that flow into this multiplier effect. So instead of making 30% of a Salesforce deal, somebody can go make $2 for every $1 that Salesforce makes. And you can go make that at 75% margin. A couple of months ago, Google Cloud came out and said their number's $5.32. Going up to $7.80 in 5 years. Microsoft, all their product lines are somewhere between $5 and $9. The new communication to the channel now is what your economic impact or your economic multiplier is. Your ecosystem multiplier. How much opportunity is for them through all 3 stages of the customer journey, and how can they go and get that money? So the final trend I want to talk about today is marketplaces. And you can see this big curve. There was more ecosystem, this is a US-based chart, but there was more marketplace activity in the first 3 months of COVID than the last 10 years combined. So talking about accelerating e-commerce, accelerating marketplaces in a world that is functioning on subscription and consumption, in a world that is embedded and white labeled, in a world that's becoming technology and also bringing together, 7 different layers of a cake. Ecosystems drive on marketplaces. There is no seller in a white van that's going to collect this monthly charge. It doesn't make sense. And to be able to procure and provision in one place, be able to manage, measure, and monitor in one place makes a lot of sense. And we know, and we're starting to see what's going to happen here. We also know that the majority of these buyers they think it's very convenient. They buy everything at home now for groceries and everything else. And they're finding it convenient at work to not only use a marketplace for transaction, but to use it for that early stage of the journey. What is my solution? How do I build or bake my own cake? How do I move through the entire process? And then at the point of transaction, that's the first 30 days in a subscription model. Every 30 days forever, driving adoption, driving integrations and stickiness, and upsell and cross-sell. Everything gravitates into a marketplace. And we need to figure out as an industry how we participate as well. How we can drive that multiplier effect inside the marketplace. There's a lot of reasons, and I don't have much time to go into them, but you can imagine that the financial backers of these companies, Wall Street, for example, in the US, is telling these companies to quickly roll out marketplaces, because not only do they get to tax the 7 layers of the cake at 15%, but if they can tax that $5 multiplier at 15%, if you do the math, their revenue doubles overnight. I use Salesforce as an example. They actually are more valuable today than Oracle, and they're only about 1/3 or 1/4 of the size, but they're more valuable. Also, they kicked Exxon off the Dow 30 as a $20 billion company. The only reason that those 2 things happened is because they own this platform, and in the future, investors see them as a $1 trillion company, the same way they see a Microsoft or a Google or a Facebook or an Apple or an Amazon, because they own that layer. So we started to think by 2023, 17% of this world would go via marketplace. Well, given what happened and what's happening now, we think we're going to hit that number this year. So it's gone from being kind of a side thing, single digits, to now for every vendor, a key part of their go-to-market. It's now double digits. It's a key part of your go-to-market. As partners, we got to start thinking about how to make that multiplier effect, and obviously start moving beyond resale and beyond transaction, where I mentioned that there's less margin, and because there's less program dollars as they get spread like peanut butter. So this is the vision of the future. I'm happy to answer question. I know we've run out of time today, but if you want to link in or hit me up on Twitter, or I'm jmcbain at forrester.com. If you have any questions about the numbers, or any questions I can answer quickly, you can feel free to ask me, and I'll follow up as well to make sure any questions here are answered too.
We'll do it, Jay. Thank you very much. It was very much to the point. I just have one comment. I was looking carefully at your the tech stack, that map of this year. I've been looking at the one you published the previous year too, and what I noticed is that maybe 2 or 3, that's it, that 2 or 3% of those companies are the usual. I don't want to call them traditional. The usual vendors that the channel is used to get in contact with, and 90% are totally new. And when I go to the IoT Worldwide Congress, what I find again is the same. Is the people that are there showing solutions are not the traditional vendors, but the people that are attending the Congress are not the traditional channel members. So I have the impression, I don't know if it's a question or not, but I have the impression that the main challenge that the channel is having is not a technical challenge to learn or certificate, or not even changing the business model. I think it's more a mindset change challenge. I think it's about broadening their mind and start considering that the future business is including, as you said, thousands of other companies that are not the traditional ones.
Yeah, so this is a perfect example of when I said there's 35 million customers.
Yeah,
this is a channel or ecosystem buyer, a channel chief, a channel marketing, channel sales. It's a very narrow buyer. And there's already 183 companies and almost $3 billion of market to that buyer. And if I look at the ecosystem, there's 100 top channel consultants that I publish. There's 99 LinkedIn groups. There's 25 Facebook groups. There's 54 magazines. There is 24 associations. There's 64 channel podcasts. There's a whole market here. So as a partner, if you wanted to serve this buyer with this tech stack, I could actually paint, it's over my shoulder with all the logos. Yeah, I could paint what these communities look like, what they read, where they go, who they follow. That changes as you move from every one of those 35 million scenarios. If I went to construction and started selling forklifts, there would be no overlap to what I just said. They're completely different markets, and it'd be 183 new software companies that I'd be showing on my forklift tech stack. And as a partner, you have to get to that level of granularity, that level of detail across those 5 vectors that I showed at the beginning. And this is the new specialization. This is the new level of flipping charts too quickly here. This is the new level of specialization. It's not about going after a vertical. It's not about going after healthcare anymore. It's about going after a 50-doctor medical clinic market in Madrid at a certain type of segment. It's getting into that level of detail. And you'll find a tech stack, you'll find a multiplier, you'll find services, and you can go win 80% of that market at 75% margin, and your growth will be off the charts.
Mm-hmm. We don't have more time, but we could be really going deeper into this. Thank you very much, Jay. We will get in contact in case there is any question, and we will keep in contact. Thank you very much, and well, keep in touch.
All right. Thank you so much.